I think we've entered a period of time over the next several years where the world is going to be looking for what is an acceptable currency, and it's going to be confusing. And so these currencies will compete with each other. There'll be less attention to fiat currencies and more attention than to others, but still, of course, the dollar will be important.
In our day, it can feel like we are in unexplored territory regarding finance and the economy. Ray Dalio would argue that although we are in a precarious position, history is simply repeating itself. He has studied the past 500 years of money to understand where this inflation came from and where it's going. In our video today, we'll roll a piece of Ray Dalio's recent interview with the Economic Times. Mr. Dalio is the founder of Bridgewater Associates, which was managing over $140 billion of assets for investors as of last year. He is a talented investor and a knowledgeable economist and is worth paying attention to. He released a book last year titled The Changing World Order: Why Nations Succeed and Fail. The title is quite self-explanatory. It explores huge debts, near-zero interest rates, massive printing of money, big political and social conflicts, and the rising of new world powers. These are all significant causes of destabilized countries. Perhaps the most pertinent of these issues today is the financial problems. In the case of the United States, massive debt was accrued over the years, creating a worst-case scenario when the 2020 pandemic hit. Interest rates were dropped to zero, and money was printed recklessly. Now, inflation is running rampant. In this clip from Dalio's interview, he covers political instability, inflation, cryptocurrency, and much more.
Where does cryptocurrency stack in this entire new changing world order?
Cryptocurrency's been really amazing in that let's take Bitcoin. And there are two types of cryptocurrencies. I'm sure you're referring to Bitcoin type, in which there is the quantity is contained, as distinct from other types of coins in which there's a variability, such as stable coins or Ethereum. But anyway, amazing that they were programmed and have operated for, I think it's 11 years now, haven't been hacked and so on, and have been acquired. Still, there are issues with them. The total value of Bitcoin, for example, all that money, is less than the value of Microsoft. And so when you think of different storeholds of wealth, it's not very big. By the way, the gold market isn't very big either. It's about 5 times the size if you take out central bank reserves and jewelry. But so they have issues. Transactions can be traced. So the privacy issue is is an issue. So they can't be controlled. They can be shut down. They can be made illegal, which tends to happen during times when they may be threats to the alternative currency. And so I don't think they'll be held as central bank reserves for various reasons. There's a saying that gold is the only asset you can own that isn't somebody else's liability. In other words, you own it and you don't have to wait for a payment from somebody else. And I think that as the environment that we're in is an environment in which there is a risk of political confiscation or other forms of confiscation, I think that gold does a better job. But as I say, we're into this new environment, and that could include NFTs, could include all sorts of things. That is it something that you can carry with you and that you can transact almost anywhere in the world because somebody will buy it. It's equally acceptable in most places, ideally private, if you can find those things. So it's a competitor, but I think in terms of its qualities, not as good a competitor. I think it's a mistake for anybody to have just one, such as picking a digital currency as this thing from not having any gold, or not having any gold, or just having just gold and not having any digital currency. But we'll figure those things out. It'll evolve over the next 5 and 10 years a lot.
Mr. Dalio, a question which our Indian audience will certainly relate with is gold. Indians, we like the glitter of the gold. Do you think for next couple of years, gold should be a large part of a well-diversified portfolio?
Yeah, gold, let me tell you about gold as a generalization. Gold has a return, normally it's low returning. It is a dead asset. It is a beautiful, limited supply, dead asset that is money. Unlike, let's say, equities, in which there's constant invention and productivity. So, but it's very important to own at some times, and at other times, it's just going to be a dead asset. And those times are these times of a lot of debt and money creation, and times of conflict, times of wars. In wars, even allied countries don't want to lend to the other country because everybody's getting in debt, and so they'll be paid back with a depreciated currency if they win the war. So I believe that this environment that we're in is an environment which is good for gold, and therefore it should be a significant part of the portfolio, but not a dominant part of the portfolio. What that might mean is maybe 15% of the portfolio. That would be, quite a large allocation. But under today's circumstances, perhaps, as much as that. And then there should be other assets that diversify the portfolio.
As inflation continues to creep higher, finding the right assets to hedge against it is necessary. Dalio recommends diversification, meaning gold, crypto, and more. You might be wondering, why diversify when everything seems to be dropping in value? We're going to end this video with a quick rundown from the man himself. But before we do that, make sure to like this video and subscribe to Profit Protection so we can keep producing quality content for you.
So to create a diversified portfolio, diversification is of paramount importance because it is the way that you can maintain a good return without as much risk. In other words, for example, if you pick investments that have about the same expected return, but they're not correlated, and you put them together well, you can reduce up to 80% of your risk without reducing your return. So how to create good diversification is very important. That includes country diversification.